Hello and welcome to Money, Money, Money. I'm Sumaira Abidi. Today we are talking about the benefits that arise from delayed gratification. Picture this. There is a festival or some celebration in your home and you're a little tight for cash. What would you do? Many of us would opt to pay for it through our credit card. Some may opt for a personal loan or even, to buy stuff through BNPL or buy now, pay later schemes and push the worry to a forward date. We may even be consistent with our repayments. But have you stopped to think about what this culture of instant gratification is doing to your long-term financial situation? Joining in today is Prableen Bajpai, founder of FinFix Research and Analytics, and she will present the financial advisor's view on why delayed gratification should actually matter to each one of us. Prableen, thanks very much for joining in. If you look at the newspapers or, even online, if you look at the ads, there is this, over the last few weeks and months, this sudden rise, in credit cards being offered, BNPL schemes, personal loans. So to, say somebody like me, it appears that, a lot more people are taking interest in it. But do the numbers actually support this? What is the credit situation in India like? And, what has the growth been like?
Good afternoon, Sumaira. Great to be here. Absolutely. I think we've seen a rise in the credit industry in India, and the landscape has undergone a significant change. So I think borrowing money or credit was always there, but it was the Bollywood style, of 60s and 70s, where the Sahukars were the oppressive lenders. And with the penetration of internet and smartphones now, the digitalization in the economy has increased. And especially in the last 2 years, we've seen that a number of players in the markets, right from banks to financial institutions to NBFCs, to a lot of technology platforms, are actually coming up with very innovative products, which are, again, the same old thing, that you are lending money, but the packaging is different, the terms and conditions are different, the reward system is different, the payment mechanisms are different. So it's the old thing in a newer format, in a digitalized format. And with all of this, there has been quite a stark rise in the credit industry in India. If we see that the share of lending to households, and households, Sumaira, would include your HUFs and your proprietary firms as well, in addition to individuals, is now actually 53.8% of the overall credit basket. That means it is more than 50% of the overall credit which is given out in the economy. 53.8 is to the households. And the rise is from 4.6% back in December 2016. So at that time, it was 34%. Now it's almost a 20% increase in the market share for the households. So definitely increase in the credit. And I think we are seeing more and more innovative products from credit card providers to a lot of technology platform providers there.
Yeah, and the ads are getting snazzier, right? So I guess that doesn't hurt. But before we get to talking about, your view on why delayed gratification matters, I just want to highlight some of the popular ways in which, this easy money is now available for people. And I suppose, one of the big ones is credit cards, right? A lot more people are now using them. People are a lot more savvier in how to use it. Do you see concerns in the way the use of credit card has grown over the last few years?
Credit cards, Sumaira, I think it's actually one of the segments where the credit facility has been available to individuals, but the accessibility has yet been less. About 5% of India's population has access to credit cards. It is because the background checks and the number of filters that they apply is more. But we've seen a very robust growth in this segment. We've seen 20% CAGR in the last 4 years. And if we go by the RBI numbers, for the last financial year, there has been a 54% increase in the value of the transactions done through credit cards. Now, part of this can come from people, because of the opening of the economy after COVID, probably a lot of foreign travel has taken place, and not necessarily that everybody is using a credit card is actually wanting to use the credit, but a lot of people also do it for the reward system and other benefits. But yes, the spending has increased. In fact, in the last 1 year, there has been a staggering 118% increase in the spending done on credit cards. Now, on one side, this is good because debt to some extent actually greases the economy. So it's good that people are buying and they are okay to take a bit of loan, use these products to buy. But Sumaira, then there's another side to it. The credit card providers, of course, make money when there is a delayed payment. The interest rates they charge are like 18 to 24%, but there's also defaulting. At an individual level, in India, the last financial stability report by RBI shows that there was a 12.7% defaulting, and this is for the public sector banks. And let's just take a look at what is there in the developed markets like the US. In the last year, calendar year 2021, 111 billion was paid by US citizens who had this revolved sort of credit card debt. And these are the people who go pay the basic minimum charges which are due and again access the credit limits because the credit limits increase. So it can actually get a lot of people into a spiral where they use these products, they are not able to make the payments, they make those basic payments, the minimal amount, and then again, they use their limits. And these actually bring a change in the habits of people because they get used to a certain money which is actually not there in the banks. So yes, a word of caution there because this can actually lead to situations where there is increased amount of debt in your personal books.
And for everybody who's watching, please be sure that Prableen and I are not here to school you about, what is your requirement as a person. If you feel that there is a justification for an expense, by all means, go ahead. Our only, objective over here was to sort of counsel you about what all of these entail. And therefore, what you can probably do if you weren't putting money here, where else could that money go? So this is credit cards. And, I totally take your point because a lot of the credit experts also have spoken to. They do say that everybody, should have 1 or 2 credit cards because you must have a credit history. Without a credit history, it may become, at points in time, very, very difficult for you to get a loan should you require that. And the other thing, for the point of today's discussion, we're only talking about the schemes which are available in the formal markets. There are any number of schemes in the informal market, but we're unable to take it up in our conversation today. Prableen, what about gold loans? What kind of growth have we seen over here? And, is a gold loan necessarily good or bad?
I would say for gold loans, Sumaira, this is actually somewhere shows dire financial stress because I think traditionally as an Indian household, nobody wants to, pledge the gold ornaments in the family. So this definitely, I think, shows that there has been a segment in the economy who probably do not have access to other instruments and who have gone out there and given their physical gold as a pledge and as a collateral and taken a loan. Also, the other reason here can be that the gold loans, because there is security in form of physical gold, are at lower rates. And there has been a more than double increase in these loans as well. 2020 May, this number stood at 33,600 crores. And as of May 2022, this figure, the outstanding loans against gold is at 73,000 crores. So it's more than double increase. And definitely this is not very great in terms of how it reflects the household helps. As you are also mentioning, even I am, if there is a need, yes, you have to go out there and take a loan. That's totally fine. But what are these loans funding? I think that is very crucial. But as far as the gold loans are concerned, a majority of it has come from people, I think, who were quite severely hit during the COVID crisis. And we've seen a huge amount of rise in the last 2 years here.
And personal loans, this, while on one hand, makes it very, very convenient, right, for people in an emergency to take a loan. But here again, the interest rates would be very, very high.
Absolutely. So personal loans, Sumaira, because there is no collateral which is there, you just go out and the bank is charging you much higher because the risk of defaulting is way higher here as well. on the basis of your basic financial background, the rates are set. So it can be as low as, let's say, about 9 to 10% to as high as 33% to 45%. So the variation is very, very, varied, where you have people probably, let's say, a government employee can get a personal loan at a much lesser rate as compared to a person maybe who's a freelancer or has lesser stable, let's say, background in terms of showing to the lender. So personal loans, I think, again, should only be taken if there is dire need. But again, there has been an interesting trend that during 2021, the festive season, it was seen that a lot of people actually took personal loans during the festivities. And it is probably, Sumaira, there is a change in the way we look at loans, we look at debt, because our propensity to take loans, I think, as a society has gone up in India. It was something which wasn't there earlier. And personal loans have seen a very robust growth, and actually 27.7% of the overall credit basket is with personal loans. Now, these figures by RBI actually cumulatively add 7 to 8 different type of loans and club it as personal loans. But just the other personal loans, which is given out by RBI, the numbers show that there was a 22.4% increase from May 21 to May 22. So again, a lot more number of people are taking personal loans. And I have personally come across cases where I have met people who have huge personal loans and then struggle. Sometimes they use their credit cards or are, pledging gold to sort of pay up one sort of loan because they have these multiple loans on them. So as an individual, it just brings you and, puts you down in that debt spiral. And why just at individual level, Sumaira? Any sort of debt, actually, even at a nation level, can hit very severely.
Exactly. And Prableen, therefore, the objective behind doing this show is that, be very, very sure when you're opting for one of these schemes, what is your capacity to repay? If you think, there is going to be an issue in the future, please refrain from that instant gratification right now. Trust me, you'll be much happier in the days ahead. But we're going to take a very quick break right now. When we come back, we'll continue this chat with Prableen. We're going to talk about buy now, pay later schemes, and we'll also talk about some smart solutions on how you can actually follow all of these principles that Prableen is talking about. Stay tuned. Hi, welcome back. You're watching Money, 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 and with us is Prableen Bajpai, founder of FinFix Research and Analytics, talking to us about why delayed gratification is important in terms of your long-term finances. Prableen, now we talk about these buy now, pay later schemes. Now, to an average mind, one would think, why would you buy now if you can't afford to pay for it? But then again, it offers the convenience for people who have, aspirational needs. It serves to fulfill that. But now the trend that we're seeing, and when I speak to a lot of people, I realize that people are even setting up entire homes with practically everything financed through BNPL schemes. Is it really, something to be concerned about?
This is a very interesting concept, Sumaira, and it has actually come under the scrutiny by RBI because they are not too happy with the way the credit lines are used for funding these particular platforms. Now, these are short-term loans. And interestingly here, the person who's using the platform doesn't need to pay anything from his or her hand. Till the time the payment is made by them, till a stipulated time period, whatever has been decided. So let's say I want to go and buy a shoe which is for 5,000 rupees and I'm a student and I just have, let's say, about 3,000 rupees in my account. I can split the payment and make, let's say, a 1,000 payment per month. And till that time period, I'm honoring my payment. I am not charged and I don't pay an interest. Of course, after that period, I am heavily charged. So the regular sort of interest rates, which are in double digits, are charged. And these platforms actually earn from the vendors. So they tap with the vendors because they're getting a huge customer base for them. So the charges are not on the person. But of course, it's not a good trend again, because Sumaira, there is no problem in using credit. The problem is with the habit formation. And if you see the reports, they are reflective of the fact that majority of the users have been in the age group of 22 to 27. And the products that they have used to use these platforms is fashion, lifestyle, skincare products, electronics, and home furnishings. So the basket of products which is being used is discretionary and it is not your necessities. And if this be the case, that means we are getting into a habit of using money, which we don't have. We are setting up our lifestyles in a way, we are getting used to spending, we are getting used to things which we probably cannot afford. So overall, the trend is not good. But of course, this particular market segment has seen a 65% year-on-year growth. And expectations are that by 2025, it would be a staggering 40 billion market in India. So they even give personal loans up to 1 lakh rupees. So it's a very innovative concept. It's been there in the West, and in India, it's come. And it even allows you to pay your utility bills. So you can imagine the kind of convenience they provide, but also the kind of change in habit formation that they are making, in the customer base.
Yeah, and, I can imagine the convenience, but definitely it comes at a cost, and which is what we'll all do well to remember. Okay, now since we have discussed the most common types of these schemes, let's come to this whole concept of delayed gratification. How does it really help in a person's finances?
So delayed gratification, Sumaira, I think as the name is suggesting, it just is sort of the ability to be able to give up immediate gains for something in the future. And this particular concept actually emerges from a very interesting study which was done by Stanford. They had tested, nursery kids, hundreds of them, with a marshmallow, if they were able to forgo that particular consumption at that time, and they were rewarded with 2 marshmallows later. And later, this study was extended, and it was seen that kids who were able to give up the first marshmallow actually ended up being people who had better SAT scores, who had better levels of health. They had better responses to stress. So overall, delayed gratification, our ability to postpone our, that need for instant, consumption, I think goes a long way in all aspects of life. And today, when we are in a world where, we are bombarded with messages and, we are being convinced that debt is good and instant gratification is what makes us happy, it is definitely something which jeopardizes our expenses. And an example of this is that in the US, where we have seen that the debt ratios are very high, a survey suggested that 56% of Americans will be unable to cover an unexpected expense of even $1,000 with savings. Only 44% would be able to do that. So this basic concept is actually setting up us for a lot of things in life, and it forms the basis of financial planning.
No, Prableen, and I couldn't agree with you more, because if you speak to insurers as well, you will realize that their biggest worry now is that, people are going to outlive their savings. They won't have enough left for when they're much older. And probably a lot of, this is going to eat into the money which they're paying as interest, is money which could have gone towards, their long-term financial planning. But the sad reality is that the world around us is rewarding instant gratification, right? So exercising this delayed gratification, which can actually help you take control of your finances, seems like a very difficult task for at least a lot of people. So can you suggest some smart solutions on how, on the one hand, people can manage their indulgences, but still remain on track for their long-term goals?
Right, Sumaira. So few things are, of course, easier said than done. And, exercising delayed gratification is one of them. I think it goes down to basics that, one actually needs to know how much and where are they spending. Budgeting is so important, and you do your budgeting on a monthly basis and for the year, because there are certain expenses which we have on a monthly basis, and there are certain expenses, let's say travel, which can be put in the yearly bucket. So first we do that. Second is accepting what you cannot afford. It is so important to accept that, okay, I cannot from my monthly income go and spend 5,000 every weekend. It's okay to accept that maybe I cannot afford an iPhone today, but I may be able to plan and afford it after 6 months. So I think first is budgeting and knowing where you stand. Second, Sumaira, if we have a long-term objective, so when you set out your financial goals, it gives you certain milestones. And once you have those milestones, you know that you are not at all moving towards them or deviating from them or probably going in the opposite direction. So setting your financial goals is the second most important step here. Third is get your basics right. So at least you're not using credit and you're not doing any of these, debts driven products are not being used for at least health needs or insurance needs or for your emergencies. So that basic checkup is very important. I think the fourth one is, which I strongly believe in, is that delayed gratification is important, but it's also important to know when you can spend and where to spend. And for that, you just have to build a spend it fund. So from whatever you can save on a monthly basis, I would encourage, it's okay to put 2,000, 5,000 less for a long-term goal, but build that spend it bucket for yourself. Put money there, and you should know that this is the money I can spend. I will spend this on an iPhone, I will shop, and I will go buy a new shoe, whatever, it's for your indulgences, and create that. And this should be different from your emergency corpus. And I think fifth very important is that try and use cash initially, though we don't want to encourage cash economy. So the better substitute here is use your debit card. You know that is the money that you have in your account. And when it gets depleted and you get a message that, okay, now 1 lakh in your bank balance is down to 75,000, it hits you harder rather than spending money which actually doesn't even exist in your bank account. So I think the pinch of spending money in cash is the maximum. But the second can be in form of a debit card where you realize that, I have spent this much and my bank balance has gone down. So avoiding, just put your credit card in a zip in your purse and don't use it. Keep it for emergencies. And try and manage with your regular savings. I think that's so important, creating different buckets.
Absolutely, Prableen. Thank you very much for joining in. And just one thing I want to add from my side is that do remember that our money habits are the learning grounds for our children. So please make sure you pass on healthy money habits to your child so that they can have a healthy relationship with money. Thank you very much for watching this edition of Money, Money, Money. We'll see you again at the same time next week.